The boom in nostalgic trading cards has led to many people dive into the sports card market and trading card market to invest in sports cards and trading cards as an alternative way to make money. Many of the people diving in are investors who are looking for an alternative type of investment, Gary Vee fans looking to flip, no offense, many arbitrage experts who sell a lot and tons on Amazon, on eBay, and a lot of stock market and crypto investors. And as a result, there are many comparisons of the sports card market, trading card market to the stock market. And in reverse of what I just said, there are also tons of sports card hobbyists and trading card hobbyists who are looking to start investing in big name companies like Tesla, speculative stocks like GameStop, and even penny stocks and cryptocurrencies. In this video, I will dive into the stock market fundamentals by simplifying them, defining them, and making them easy to understand so we can compare them to how they relate to the sports card market. My goal is to provide a perspective from someone who indulges in the sports card market and in the stock market. I'm not an expert in either field. This is not financial advice. This is simply my perspective, and this is just fun to talk about. So let's get into it. The 4 fundamentals that I will talk about in this video are organized bodies, trading through brokerages, private companies that go public, and how supply and demand affects prices. There's different variables within these categories, but I will keep it simple. The stock market has different organized bodies for different purposes. You might have heard of the New York Stock Exchange and the NASDAQ. Those are marketplaces for stocks, bonds, ETFs to sell on. For companies to be able to sell in the NASDAQ or the New York Stock Exchange, they need to meet specific criteria such as earnings threshold, which means that the company has to make a certain amount of earnings, amount of years in business, and their stock has to be trading at a specific amount. A different organized body that is heavily involved in the stock market that you hear of often, especially this week with the whole GameStop frenzy, is the SEC. The SEC was set in place by President FDR after the Great Depression, and this was set in place to protect investors due to the fact that the Great Depression devastated the entire country for decades to come. The SEC regulates the market by enforcing US laws. There is no direct comparison to the NASDAQ or the New York Stock Exchange for the sports card market, and there is no commission or government agency to protect sellers from fraud. However, you can say that the hobby is self-regulated and people like that. So people that are involved in the stock market, they can't call up the NASDAQ or the New York Stock Exchange and say, hey, I want to buy 10 stocks or 10 shares of Tesla, right? They have to do it through a broker, a middleman. And trading stocks in the stock market is restricted only to brokers. So it can only be done through brokers such as Charles Schwab, TD Ameritrade, E-Trade, Webull, link in description if you want a free stock, Robinhood, link in description if you want a free stock, SoFi, link in description if you want a free stock, Public, link in description if you want a free stock. You get the point. So you're able to buy, sell assets, investments such as stocks, ETFs, bonds, all of that through these brokers, and there's tons of them to choose from. What I do and how I really got started is I took advantage of a lot of the promotions that these companies have, such as Robinhood. You sign up, you get a free stock, I get a free stock. The same with Webull, the same with SoFi, with Public, with a bunch of these companies, right? With Cash App, with Acorns. There's so many of them. Just take advantage of that. Why not? You can just let that stock sit there and appreciate in price, because it does. And sometimes a lot of those pay what are known as dividends. Quarterly, the company will give you some amount back for owning a piece of their company, which is quite awesome. And not every company does that. Some give out more than others. So that's for a different video. Again, this is for fundamentals. So let's stay on track. For sports cards, the great thing is that you don't really need a broker. You don't need a middleman. I can go to my neighbor and say, hey, do you own sports cards? Yes, I do. Okay, show them to me. Let's trade. And we can buy and sell. You see a lot of this happen on Twitter, on Facebook, on Instagram. The biggest marketplace for sports cards that is not restricted, which is key. And this is why it's not a direct comparison to the NASDAQ or the New York Stock Exchange, is eBay. Because eBay is a marketplace that, is not regulated. It's free to use. There's no restrictions really, unless you're trying to sell fraudulent stuff. Obviously, that's going to be stopped. But that is the biggest place for you to be able to buy, sell, and trade. So I see it more as a broker for sports cards. But one that is really seen as the broker these days is StarStock. So it's marketing itself as the stock market for sports cards. Let's check it out. Okay, so this is the platform here, StarStock, the stock market for sports cards, as you can see. And if you dive in, it'll go into featured cards. This is awesome. NBA Emerging 30. So it basically gives you the emerging 30 players that are emerging and top selling. Sealed wax. Today's most traded. Latest sales. Newest arrivals. So this is super awesome. Let's log in. And this is basically my vault right here. So these are the cards that I have sent in. They only accept certain cards, mainly rookies. So again, this to me is a direct comparison to a brokerage. If you want to sign, if you're new to StarStock and you want to sign up, make sure that you use Cash Cultura as the referral code, and you should be able to get $10 on your account as a free startup fund for yourself. And then I'll also get I think $10 for referring you. So it's a win-win situation, a great way to help out the channel. Private companies going public, aka launching an IPO, initial public offering. Let's dive into it. Most companies start off private, and through their development and success, a lot of them choose to go public. And this is a strategy for these companies to be able to raise capital, money. So they launch an initial public offering where you and I can buy a piece of their company through these brokers like Webull, Charles Schwab, SoFi Public. You go onto their platforms and you can buy a small piece of that company. That's what that means. When you buy a share, 2, 20, 100, it doesn't matter. You're literally buying a piece of that company. So why do companies need all that capital? Well, it's a way to invest in their operations, acquisitions, research, and development. So they can expand their capabilities, capacities, and improve their products and services. As companies go public, they do and often encounter challenges such as the diversification of ownership, restrictions on management, and it opens up the company to regulatory constraints. In this topic, there are many similarities, but many differences when it comes to the stock market and sports cards. Here is my take. So after many weeks of jumping on both sides of the argument, I have come to this conclusion. I do believe that there are undeniable similarities when a company launches their initial public offering, so me and you can buy a piece of the company so they can raise capital, to when an NBA player, NFL player, or any athlete launches their rookie card for the same reason, to raise capital, because they get paid when they sign autographs. It's unclear if they also get paid for their card just being able to be printed by Topps, Panini, and Upper Deck, but they definitely get paid when they sign autographs. And obviously that's a great way of those athletes raising capital, especially when they're rookies and they are not making all the money that they will eventually make for the rest of their career. And just like companies can raise that capital and then reinvest back into the company, then right, technically speaking, an athlete can do the same with that capital. They can reinvest it back into off-season coaches, weight training regimens, things like that. Does it get done? Probably not, but we're being technical here. So I do believe that there are some similarities when comparing those two. Now, here's the massive difference between these two markets. When I buy a Ja Morant card, that money does not go to Ja Morant, right? If I buy a card from someone on eBay, Twitter, Instagram, or my neighbor, then that money goes to that person, my neighbor, the person on eBay, the person on Twitter. It goes to a third party. It doesn't go directly to the athlete. Or if I buy a card directly from Topps, like let's say these new garbage pail kids cards that just came out for GameStonk, which I love. I bought some. I'm going to put a link in the description if you want to go to their website and check them out. If I buy that card, then that card is not going to go to the Reddit user, Roaring Kitty, who is behind Wall Street Bets and made that incredible GameStop purchase where he turned a couple $1,000s into millions of dollars, right? The same, if I buy a Derek Jeter card off Topps website, it's not going to go to Derek Jeter. It's going to go to the manufacturer of the company, right? Or if I go to, let's say, a retailer like Walmart or Target, and I buy a sealed box, then now it becomes even more complex and difficult to explain where all that money goes to. And then you might not even end up with a Ja Morant card because you're really gambling to see if you can get it, right? So this is where this is a major difference between both of them. How supply and demand impacts and affects prices. In the stock market, a company has a specific amount of shares out in the market that people can buy. For example, GameStop. GameStop currently has 69 million shares out in the market that people can buy. Another example is Tesla. They have a little bit over 900 million shares of what are known as outstanding shares that people can buy. Usually, the less that are out in the market, the easier it is for that price to go up, which is actually what happened with GameStop when you compare it to other companies like AMC or Nokia, right? And I'm saying these companies because these are the speculative companies that had all the hype going on this week. And a lot of people were wondering why AMC and Nokia didn't skyrocket like GameStop, even though there was tons of people buying them. Well, because GameStop has way less shares out in the market. Therefore, if there's more people buying, then the price will probably increase a lot faster. This is pretty similar to sports cards because when it comes to sports cards, there are a certain amount of cards out in the market that people can buy. And usually when there's not a lot of cards out there, then prices usually go up for those cards because of the exclusivity that comes with that, you not being able to find them on eBay or Twitter or anywhere. So prices tend to go up when there's less cards available. One of the biggest differences is that companies can offer additional shares for the public to buy. So if there's 60 million out, then they can offer 100 million more, or they can put 100 million more out in the market for people to buy. And that's usually when companies have seen the stock price rocket and there's incredible interest for the company. Now, when it comes to cards, they really can't do that. Players only have one true rookie year. And normally the rookie cards have a rookie logo on them. So even if card companies wanted to reprint that rookie logo onto their sophomore, third year cards, the public would know because they know what year was their actual rookie year. So they can't reprint those. The public wouldn't buy those, right? If a company tried reprinting rookie cards after their first year. So that is one unique factor when it comes to sports cards, which really drives the demand of the product because the supply is low. Think about Kobe Bryant. And I'm going to give this away right now. Kobe Bryant had a very long career. He had 20 years in the league, but only one of those years was his rookie year. So that's why that year has an extreme exclusivity tag put on it. And those cards are extremely valuable. And you've seen them skyrocket. Rest in peace, Mamba. And this is an incredible factor when it comes to sports cards, that there will only be a few amount out there for the rest of existence. And that is awesome. Even if there's millions of cards out there, as long as there is demand, then prices will increase. That's what's happening with a lot of the cards from the junk wax era, like Michael Jordan cards. People say that there was millions of them printed, and there's people like this guy Davis, Vegas Dave, or Dave Davis, or Vegas Dave, Dave Vegas, or whatever his name is. He's basically saying that the sports car market will soften, right? Which is not a hot take because markets go up and down. He's saying that the MJ card is a bogus price at $200,000 for a grade of a 10, from a 1 to a 10. The card is graded in a condition of a 10, and there's people like Gary Vee, they say that's undervalued, it's going to reach 1 million. And I actually believe that, because Michael Jordan, there's just not going to be another athlete like him. He is not just the GOAT when it comes to basketball. He set the bar for how excellence should be achieved when it comes to competitive sports. And therefore, his cards have the value behind them, even if they're part of that junk wax era, which really sets the tone and explains everything when it comes to sports cards. Because if a card that was printed in an era where cards were overproduced and they lost their value, then just imagine when they weren't, right? The 1996 Topps Chrome Refractor of Kobe Bryant is a short print card that was not overprinted, or even his Chrome cards or his base cards, right? And they still have not seen a piece of what the Jordan cards are going for. Now, modern cards are a little bit different. When it comes to LeBron, I definitely feel like a lot of his cards are undervalued. And now when we go to newer years like Luka, Zion Williamson, they were printed a lot more. However, if the demand is there, then the demand is there. That's what dictates price. The same goes with the stock market, right? If there's 64 million or 900 million, which stock is trading for more? Tesla, right? Definitely. And yeah, there's fundamental differences between the two companies, obviously and definitely, right? But that does paint a picture when it comes to supply and demand. There's a lot of other things that cause supply and demand to go up and down, such as when there's spin-offs of the company for the stock market, when there is a change in management, when there is just overall news for a company, that tends to create what's called volatility. It can go up and down. And most importantly, the economy, that can directly impact the stock market. So the stock market really reacts on news. And the sports car market is very similar, because owners of cards can react on news if someone gets injured, if they are not playing well, or if they are playing extremely well, if they had a few good games, then that definitely creates volatility in the card. And also the sports car market is very seasonal, right? You will see card prices go down in the off season and go back up when the season starts. Ultimately, both are great to be involved in if you enjoy making money, if you enjoy community, and if you enjoy learning something new every day. It's up to you if you want to get involved. That's your decision. If you do want to open up a brokerage account, you have different options. You can use some of the links below. Again, really helps out the channel. Thank you so much for giving me the opportunity to explain this to you. Now, let's give away some sports cards.